Hello everyone, this is Arif and today we are here with another unit of CIA Part 1. And to my excitement, it is the last unit of CIA Part 1, Unit 10 about fraud risk. This is a brief snapshot of my entire career trajectory, my professional and academic background. In case if you are interested to know me more, you can pause this video and we can also connect via LinkedIn. In this slide, we will be discussing about the entire snapshot of the entire CIA journey, CIA Part 1. It has the first unit is about the fundamental of internal auditing, which comprises of the internal audit definitions and some important concepts. And then we move to the section, the two key role of internal audit, which is to perform advisory services and to carry out assurance services. So we have covered that, and we also talk about ethics and professionalism. Then we dwell in some other topics related to governance, risk, and controls. And in our today's video, we will be discussing about fraud risk. And with this, we will be completing our CIA Part 1 journey. This is another interesting slide of the entire CIA journey. So far, we have covered 9 units out of total 10. And in our today's video lecture, we will be completing the last unit, which is Unit 10, Fraud Risk. We started our series with the Unit 1, Foundation of Internal Audit, in which we discuss about the definition of internal audit, the purpose of internal audit. We talk about the independence and integrity of the internal audit and similar topics. In from the unit 2 till unit 4, we talk about mainly two types of the key main activity that internal audit perform. Assurance services, we discuss different kind of audit engagements in detail, and advisory services, in which we discuss what types of advisory services internal audit perform, generally which related to benchmarking, which related to due diligences, trainings, process reviews from the control perspective. So that kind of activities. We have also discussed about the ethics and professionalism in Unit 5, which is about what are the key characteristics that internal auditors should withhold being a professional internal auditor. Then from Unit 6 till Unit 9, we have covered some of the key element of GRC governance, risk management, controls, and we have discussed about different models of risk management, then controls as well. We discuss about different classification of controls, different types of controls. We in our previous unit we have discussed about the application of controls, how it is applying a business setup. And in our today's video, we will be discussing about fraud risk. The current unit comprises of 15% of the entire syllabus. Previously, we have covered 85% of the syllabus. So eventually, we will be completing overall 100% syllabus. You can expect about 19-20 MCQs from mainly this section of CIA Part 1, because there are a lot of topics that is covered in fraud risk, and it's very comprehensively covered. And this is the only unit where it is so comprehensively covered. So a lot of MCQs might come from this unit, so you have to be very mindful and try to understand all the key concepts. This is another snapshot of the current unit, fraud risk, which we will be covering in this video. If you look at, there are mainly 3 areas that we will cover. What are fraud risk? What are the types of fraud risk? And then against those risks, what are the key controls that is supposed to be there in the organization? And the third main topic of our today's discussion would be how investigation could happen, and what are the key processes, and what are the roles of management and internal auditor in fraud investigation. In addition to that, in the last two slides, I have also covered additional areas which I have somehow missed out in my earlier videos. In the in the previous section, the fraud risk and the fraud control. So those missing topics, I have covered digital fraud landscape and risk, and additional professionalism and fraud detection technique. Since I have recorded the first three sections some time back, so I will be hmm, combining those discussions with this slide. However, the missing units I will cover in the end. So whenever we talk about fraud, the first thing we have to do is to define what is fraud. So just to have a brief and very quick explanation of fraud, fraud is any illegal act characterized by the deceit, concealment, and violation of trust. So basically, if we violate someone trust, if we manipulate something, or if we try to play overly smart for any wrongful intention, that constitute fraud. The definitions are many, but this is the crux of fraud definition. Effects of fraud, there are two effects. One is monetary, and the other one is the failure of governance within a structure. Even the monetary value to determine a fraud is not so easy, because majority of the frauds are not being even properly evaluated or highlighted, because the element of shame or bad publicity associated with fraud. I From my personal experience, I have noticed that there are many companies which encounter fraudulent incident, but at the end they try to manage it, or um, the remedy which they look forward is within the closed doors, which means either they carry out a settlement with the fraudulent, sometimes they terminate the person. It's very rare that they file a lawsuit against the culprit, unless until it's massive, huge amount of fraud, or just in case if it is publicly exposed, that incident. um, the reason why, because the fraud has already been occurred, and the companies, they fear bad publicity, and because of that the management especially are not willing to have a reputational damage, which might sometimes even cost more than the fraud which already happened. However, and the general stance within the companies are that there are zero tolerance for fraud. But again, just by putting a policy is not enough. You have to ensure that there is a culture that that enable people to feel secure, and if anyone does anything wrong, they will be held accountable for, and there will be a just and right procedures or in place, just a system that will prevail. So in that case, the fraudulent incident decline, but otherwise it's difficult to manage. Characteristic of fraud. So whenever we say that why someone commit a fraud and how it happened, we have a famous model, we call it fraud triangle, basically, where there are three elements. We believe that it has to be in parallelly or in conjunction. It has to work together in order for a person to be able and successfully be able to commit a fraud. The first thing is pressure, which means that a person, whoever is a convict or who is trying to perpetuate a fraud, he might be under any pressure to carry out that wrongful act. So generally, as a human being, no one likes to play a villain role or do a wrong thing, but there are circumstances where you might feel under pressure. For example, you are in a financial distress position where you need money immediately, maybe for the treatment of your some of your loved ones, Maybe you are in a heavy debt and you have to make a payment, otherwise there might be a legal proceeding. Your child admission is due and you have to pay the fee and you do not have that. There could be hundreds and millions of reasons why a person feel pressured. Sometimes it is also because that there are unrealistic targets within the company where you are being pushed to the limits that if you do not achieve those targets, you might you might face a consequences, maybe a termination, or sometimes your bonuses are associated with a certain kind of financial growth or financial targets, which lead you to be more aggressive toward achieving those targets. So this is all constitute as a pressure, a reason why you want to commit a fraud. Let me tell you, majority of the fraudulent incidents and high profile incident happen, and they are being sometimes carried out by people who have never committed a fraud. They do not have the history. It is because of these pressures that which lead someone to carry out or to to get into these troubled activities. The second thing is opportunity. Opportunity means that the person who he got that ill intent to carry out a fraud, he also see a foreseeable or an environment where he can commit that fraud. For example, he is the highest person in the company and he has a lot of autonomy in deciding certain action or taking certain decision. For example, uh, the person might be under financial distress and he the procurement head and he had the full authority to grant the procurement quota to any of the supplier, and he decided to go with one who might give him a kickback or a bribe. So technically he might say that, I'm just giving anyway, he's the right person, so why to go with why, whereas X is giving me an in financial incentive, and there is no harm because the company you are paying for those goods and the company is receiving those services or goods. So the opportunity is there, and some of the key controls in such situation is lack of segregation of duties, where one person has too much of information or too much of authority and autonomy. Experienced people commit most of the time heavy losses, heavy fraudulent activities which lead to heavy losses. The less or newbies or the one who are in the start of their career, they commit a smaller because of their they have less of authority to commit. So lack of control generally leads an opportunity for someone to execute a fraudulent activity. The last thing in the fraud triangle, which are one of the necessary thing that's a person might might enable a person to carry out a fraud, is realization or rationalization. It means that by nature human beings are programmed in a good in a good manner in which they feel bad for doing anything bad. So you have to satisfy your inner self, your soul, that because everyone knows if someone commits a wrong act, unless until it's a negligence. But generally, if you are intentionally doing a wrong thing, you might realize that it's not the right thing to do, but you might still go about it. So you have to justify to yourself to have a peaceful sleep at night or to do that wrong act. And generally people rationalize that maybe the company is not fair, I should be getting more pay since I'm not getting, so it's okay to steal something from the company or to cheat the company in terms of working hours, or get something from. And like in the example of a procurement head or procurement manager who just take a bribe by granting the contract to a specific supplier, though he might be a competitive, he might be offering a competitive rate. But the thing is, Why to bribe? Because if everyone start doing the same thing, the entire governance structure get affected by. I will just give you a practical example which I've seen in my practical life, that there was an MD of a company um, who bought a very expensive house, and he does not want to go to the bank because the bank charges the interest, and sometimes they ask for collateral and all. So what he did, because he was very much autonomous in looking after all the factory and everything, and the owner has a lot of trust because he was serving with them for more than 2 decades. What he did, he take out the amount of that amount from his from the company, and no one stops him because the internal audit was pretty much non-existent in that company. And he granted himself a loan without even disclosing to the board members or the owners of the company, and without having any proper policy. And later on, when we carry out an investigation, we came to know that this person has rationalized himself that anyways, I was not intent to take away that money, and I was paying from my monthly salary a certain portion against that loan which I have obtained, and it is documented. But the thing is, have you informed the board? No. Was there any policy? No. And if you were with the right intention, why didn't you disclose it the first place? They might have granted you this right as well. But just because you feared that there might be a refusal and you would not be able to get this benefit, so you carry out that activity. So he was under pressure because he wanted to buy that expensive house. The controls were weak because there was no as such strong internal audit department within the company, and he was autonomous, and no one can question him because he was the highest authority within that company. And the third thing, rationalization, he rationalized himself by saying that I was paying a certain portion of my salary against that loan which I obtained. So all three elements were there for him to commit that wrongful act. And this is how we understand that when someone commits a fraud, this is the reason why. And these three components needs to be met at least to carry out those activities. So this is a brief explanation that what is the rationale and how and why a good person might commit a fraud. So here we are different types of fraud. So one needs to understand all these types. You don't have to memorize. You just need to have a good understanding of that there are different ways of committing a fraud, and eventually no matter which way you use, it's a wrongful act and it needs to be condemned. So asset misappropriation is a very common and approach where you take the company assets or you take the company cash. For example, you are working in a company and you found uh, something in the inventory of the company and you just take it away and you said it's fine, it's a smaller amount. Even honestly, to my belief, small stationaries that are in seems to be immaterial within the company should not be taken as for your own personal use. We should be morally responsible to believe that everything that the company owns, it belongs to them, and against that they pay you a wage or a salary. And if there is something that the company wants to give you, that's a separate story. If there is an incident that where you use but after the approval, then it's fine. So using company car for your personal use, using company or withholding cash obviously or anything, that is not the right thing to do. So asset misappropriation generally happen in the company because there is assets or inventory, or there are things which are lying down, and people use it wrongfully. Skimming is the second type of fraud, which means that you take the cash before it is being recorded. For example, you are a person who is in sales and who is also responsible to collect the cash from retail shops. So you deliver the inventory and then you collect the cash from them. So there might be possibility that you need you are out of cash and you use that company cash and using somewhere else, and then even without even letting anyone record it. So there might be people, especially those who are in charge of collecting cash, and they might use it for personal reasons, and without even the recording happen, because once you receive the cash, then you have to give a deposit to the finance, or if there is any procedures. I have found one incident in my career where the sales people, they were issuing a wrong receipts to the retailers whenever they drop the inventory. These retailers, they pay for those inventory, and they were issuing a wrong receipts, so just to let them know that this is the evidence against the payment. And sometimes they say that there are damages where the product get damaged, so you can claim that there were damages. Obviously there needs to be a good controls to verify that whether these items are being damaged or not. Or sometimes there are samples, so even he was selling the samples. And so when we went to visit those shops, we came to know that the receipts which they have and the receipts which he submitted was of different number and different, so it was completely fake receipts which he was giving, and he was making his own receipts which were he was submitting in the company. So skimming is this concept. Payment fraud is generally when you make a fictitious goods or services and the company make a payment against it. For example, you say that the company has received certain kind of services and there is need for payment, and the payment is being made, but the services is not received or the goods are not received. So this is a payment fraud. Expenses reimbursement fraud is very common, especially travel related expenses where people make a fictitious invoices, inflated rates. For example, they had a dinner at a restaurant, and they just asked the person that you will pay the actual price, but they ask him to put an extra amount in the invoice. It happens in some smaller shops, but it cannot happen in a big one, obviously. But this is just a very lame example which I'm trying to give you, but generally it happened. For example, the guy who has to buy something for the company, he said that, okay, let's put to the vendor, let's put certain amount in the invoice and we will split the extra amount between 50-50. So that could be hundreds of scenarios, but it is just to give you an understanding that how expense reimbursement fraud happens. Sometimes you fake the invoices, so that also happen. Payroll fraud is more associated when you do not have an employee or the employee has left, but still the salary is going on. Sometimes the people, I have witnessed this as well, where one employee who already left the company, the guy in the accounts, or who's responsible for managing the bank accounts of those people, he without any approval changed the bank account of that left employee to his personal account and didn't mark him as a person who already left the company. So the salary was being paid to that employee for more than a year and a half when we discovered that incident. So it apparently looks like very impossible thing to do because of all the controls and everything, but companies are sometimes so complex. There are thousands of employees, and there might be an oversight, there might be a system error, people override, sometimes people collude, two three people collude together to commit a fraud. So that also happened. Financial statement misrepresentation is the very executive level kind of a fraud, where the senior management try to portray a better picture of the company, so they carry out certain changes within the financial statement through different exemptions, so that lead to a misrepresentation. Why they do it? They might be under pressure to meet certain targets, or to reduce the tax, or any other reason it could be. um, Information misrepresentation, again, it's a very common in the corporate world, where you give a wrong information about what is happening within the company or about any event or any transaction. So that's very pretty obvious. And corruption is the improper use of the power. So where you let a person do something where he shouldn't be doing that thing, and so that constitute as corruption. Some more example of different types of fraud: bribery, obviously, which is interlinked with corruption, by which we pay as a kickback or as a money to someone for them to do something for us, maybe take an approval or accelerate the process or do something which is legitimate, it is illegitimate. Conflict of interest is where you prioritize your interest over the company interest in a commercial or in a business setup, and basically whatever wherever there is a conflict of interest, you need to disclose that within the company. So for example, if you're working with two companies, then both of the companies are competitor, so you have to disclose. If the company is okay with that, it's fine, because in the given circumstances, they will look at if there is a problem, or if the company interest is being defeated or being ignored, then only they will not grant you the permission. But sometimes they do grant you permission as well. So you have to see that if you feel that there might be for example, you want to be a supplier to the company, you might be a consultant to the company, so or your brother or any of your family member you want to introduce to the company for any services or benefits. So all that needs to be disclosed to the compliance department within the company, and after their approval, generally you go for such kind of transactions. So conflict of interest when you prioritize your personal interest over the company interest or shareholder interest. Diversion is a mechanism or a technique by which the company pay but do not get the services because of the diversion. For example, one of the case in my career, I will explain to you that the emails of the company were compromised, and as a result, there was an person or a culprit uh, who 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 sent the email uh, on behalf of the senior management of the company to the finance that kindly release this much of the payment to that vendor under this new account details. um, and these people, these perpetrator are very much clever. They have a lot of patience. They wait, they keep on read the email trails, and they understand the business, and then they commit, because a sudden change in the accounts might not be possible for finance to entertain, but since they know the context, that such kind of a payments keep on going to that person, so let's do. And unfortunately, in that incident, which I have encountered, that the company made the payment, but they instantaneously found that this was not initiated by the intended user. This email, how? Because the finance person um, had a meeting with that person, and just in the meeting, he just out of the way, he said, I entertain your email of the payment with the new account details. He said, for what? And then he gave the context, and he said, no, it is not being initiated by me. So the email was compromised, the system of the company was compromised. But the good thing was that when we immediately called to the bank stopped that payment. And it was not initiated because the weekend was coming, and so we save on that money. But this is called a diversion. A wrongful use is wrong use of information, wrong use of any of the company assets. Related party fraud is when you are the company and you have a subsidiary and associates, and they deals with the parent company with not an arm's length transaction. Means um, you are a company manufacturer of certain things, and then you have a company who has fleets, so transportation company. So you charge either over the market or under the market or below the market, and just to show either more expenses or less expenses. Sometimes you show more expenses within the company in your transaction to avoid taxes, and sometimes you show less expenses and more revenue to show the good performance of the company. It could be for any other reasons, but generally related party transactions happens within the group entities. So that is one also a form of a fraud, and tax evasion in the last is the most common one. Generally, the company whitewash tax evasions by doing corporate social responsibility, which is not even a fraction of the price of the amount of tax which they try to avoid. Tax avoidance is fine if it is legal, but evasion is when you take a wrongful act and you do it by manipulating certain things. So that is criminal activity. Types of fraudulent process. So there are different types of. There are basically two types which are given in the context of the CIA course, but generally there could be even more. Lapping receivables is when you, for example, you receive amount from one customer, right, and it was a debtor, so we receive from our debtor one amount, the amount, and the person was who collect that amount was in need of cash, so he used it for his personal use, and now he doesn't have anything to show to the company that he has received, but during that time he received the amount from another customer which he adjusted against the previous one, and he keep on doing that thing till either he paid back the same amount to the company or someone discovered that incident. So this is called lapping receivables. Check hitting is a form of fraud which is, honestly speaking, these days it's not so easy to commit. It was in the old days, but I just wonder maybe there are places where it's still happening. Basically, when you issue a check for pay as a payment mode, despite knowing that you do not have enough money in your bank account, and the um, bank transaction takes 2 to 3 days for clearing that check. So during that time, you just put some money in the bank before it get bounced, and you keep on issuing such kind, and there is a lapping period, or there is a period with 1 or 2 days where you have some cushion to fill that amount, or to deposit that amount in the bank. So this was a kind of old days technique. I am not so sure these days we have instant payment, online payments. Generally services are being delivered after receipts of the payments. So I'm not so sure it happened still during these days, but this is one of the way, or benefiting from the process while committing a fraud. So now we have two interesting more topics, which is symptoms of fraud and fraud committed by whom. Okay, so symptoms of fraud means that um, there are certain pattern which you might observe whenever there is conviction of a fraud. Documentary symptoms is that the documents of the company are being faked or being altered. So this is one way of people committing fraud. So being as an auditor, we check on the to the we check the documents. For example, in the expense claim, we always ask for to see whether the actual invoices are being attached or a photocopy, or if there is an altered document in terms of agreement and all. So there is a different way. We just don't look at the document, but we see the corresponding event, and we see circumstantial evidences that supports that document. Sometimes there are major databases, maybe a regulatory body or some other websites where you can check the authenticity of the data. So there are different ways of, but generally documentary symptoms of a fraud, if it has been perpetuated, is that the documents are being altered or it's a fake document. Lifestyle symptoms, whoever commit a fraud, generally you will find that they are living beyond your means, which means that they might be driving an expensive car which does not justify his salary or his income. One of the cases which I know which was reported in the media was There was a telecom company, and there was one agent of that telecom company. He was a low-level employee, and who was responsible to issue a SIMs. So strangely, people find that he was driving a very expensive sport car, which he could not even technically cannot afford. Later on, it came to know after investigation that he was, whenever you have a, he was first of all issuing. S- I do not remember exact details, but he was issuing the company's SIMs, um, by asking for a price. Maybe it was like a free sims, but he was asking for a price. And sometime what happened that people come with an adjustment to their postpaid bills. He make false claims that they were not justified for such kind of a payment, or it is over payments made by the company by something doing. And he adjusted their bills, and as a result he take a cutback from these people. So there was certain kind of this kind of transactions which he was doing. But anyways, the crux of the situation is that he was living beyond his means. So if someone cannot technically afford to buy $1 million house or $2 million house, because he is living paycheck to paycheck, but now he owns it, either he got a lottery, or there might be that he is doing something wrong. So that's one of the symptoms. It doesn't mean that the person has committed a fraud. It just means that you have to take into account that thing in the company, in the corporate structure, that are people living within their means or not. Behavioral symptoms, that these bad activity, it always lead to stress and anxiety, no matter how much we try to overcome. But still, even if we rationalize it, somewhere in our heart we feel that it's something that we're not supposed to do. So if a person is in constant stress or guilt for something, then you might know that there might be a possibility, if we have other that if he's living or beyond his means, and if you believe that he has an authority where he can be, there is an opportunity to commit a fraud, there might be a possibility. So these are just the symptoms, but you have to just take into account. And from the exam perspective, you just need to understand the concepts and see if a situation is being given, so you can see whether it's belongs to which system, or these kind of MCQs. uh, if a fraud is committed by a low level staff, is generally about stealing something, maybe something from the company manufactures something, they just take it out, or any of the assets, or um, so that's or cash maybe. So generally low level staff go for such kind of activity. High level executive, they manipulate the financial information of the company, or the information within the company. So misappropriation of assets might be things which happen at the very top, but at an executive level, corporate. So the executives are more concerned about the financials of the company. So this is a distinction where you need to know that generally people with less authority will commit a smaller and stealing kind of a thing, and people with a higher authority, they will manipulate in terms of bigger numbers, in terms of financials of the company, for their own incentive, or maybe they are under pressure. So here we are with some fraud risk and types. Under that section, we are with some red flags. So red flags are indicators that you have to be aware of in order to scan things around and see while doing even the audit. Because if you are aware of those red flags or indicators, you might be better in a position to identify or to spot on any fraudulent incident. If these are basically lack of controls, we call it. So lack of employee rotation. So if there is no, in sensitive areas, for example in procurement, sometime in the finance department, there is a policy within the company that the employees needs to be rotated. So if someone is reluctant to be rotated, it means that he might have set up a system by which he is trying to take out his personal benefit out of the company processes and doesn't want a new person to come and discover. So this could be a possibility. Lack of clear job description, this happens most of the time within the company, that it's so complex and companies are changing very fast with the dynamic environment, so no one knows who's doing what, and as a result, when people say that they can get rid of the responsibility and accountability, they might commit a fraud. So job descriptions needs to be very much in line with what the person is doing, because that's how you establish the accountability. The third thing is segregation of duties. So if one person is, as I've given you the example of the MD or GM of the company who committed a fraud because there was no one to ask him. Sorry, but my point here is lack of segregation of duties. Lack of segregation of duties is when someone has ultimate authority for initiating, executing, and finalizing and receiving the payments of a transaction. um, for example, a person who is who can take the lead on who should be onboarded and who should be made payments to, uh, and so if he has the control over the process, then it's a high possibility that he commit by himself. But if there are two or three people involved in that transaction, then the possibility is reduced. For example, if you need to have a reviewer, an approval, an initiator, and the collector, these four people in a purchase department, separate people, then they have to collude together in order to commit that fraud, that all get together, otherwise they wouldn't be. So that could be a right example. Ambitious sales and production goals, this is happen at the executive level or sales teams, sometime marketing team, which are being pushed to the limits. So if you are being pushed to the limits, you might manipulate the results just to show that you are doing your job, and as a result, it happens in the investment banking, where your clients, you have to bring investments to the company, or you have to bring rich clients, or you have to manage portfolios. So in that case, it might lead to commit a fraud. Employee refuses to take vacation, this happen, we this I've seen in my practical example, in practical experience, where there was a procurement manager. First of all, he was autonomous, and he was talking to the suppliers. He was finalizing the whose vendor with whom we will be dealing with, and he was the one who approved the payments for those vendors. And so we asked his subordinate that what happened when he goes on vacation. He said no, he doesn't go on vacation, he's such a hardworking person. Later on, we came to know that he established a company by his wife name and his mother-in-law name, and he was supplying the products to the company at inflated prices. Obviously, there was then things, remedial things happen, some lawsuits and all, but generally, when an employee refuses to take vacation, this could be an indicator. Control overrides means that when you defeat the control within the systems or people, you say that there is no need for a review, there is no need for an approval, or a person just remove that from the transaction, or sometime you override means you execute the transaction without certain approvals. So that could lead to also a fraud. High reported high reported profit despite competitor or economic downturn. So if one company in the entire sector of that industry is performing amazingly, despite we know that there is no contributing factor that that sector can boom within such a competitive environment, then we have to be a little bit skeptical, and then we have to dig down more why, how the company is making more money. The example which I've seen in my practical experience is there was one company which was doing outperforming his competitors within the sector. Later on, we came to know that the sales teams, the GM of the sales, was bribing certain individuals in certain undeveloped countries or developing countries to to get the orders for the company. So that is not being acceptable. So that's how we discover it. So this might also be a symptom for or indicator for committing of I mean, as a red flag for the fraud. Sole sourcing, when you are only buying from one person, so that could be also disproportionate increase in sales versus cost of sales. So cost of sales is the direct cost, which means that if your sales increases proportionately, your cost of sales will increase. But you are saying that your sales are increasing but your cost remains constant, so then you have to dig down why is that happening. So that's one could be indicator. Actual product differ from requisition. So you pay for a high quality and you get a bad quality. You pay for a higher quantity, you get a lesser quantity. So this could be also an indicator or symptom. Petty cash not handled through impress accounts. So impress accounts basically is the account which are being formally managed for small purchase within the company. Let's say $100,000 of an impress amount the company maintains. So if they have consumed around 20,000 or 50 or 60,000 from that fund against certain purchases, so they raise an requisition to the finance that we have to you have to replenish the impressum fund or account. To do that, the finance asks for all the invoices, original invoices. They verify whether they have spent on a correctly, and they reconcile, and then they release the fund. So if you do not have, you just go every time to the finance and take some cash and pay for something, then there could be a possibility that it might lead to a fraudulent activity as well. This is very important slide because there are certain misconception about internal auditors in regards to what their role is towards identifying or investigating fraud. So we needs to be clear about these things, and we should educate people around us as an auditor that what is the role of internal auditor. uh, Internal auditors are not responsible for investigating a fraud, for the detection of all frauds, but rather they are responsible to alert if there is a possibility of a fraud. So if we feel that there are indicators which might give an assumption that there might be a fraud, so we can alert, but this is not our primary responsibility that we should detect a fraud knowledge. We needs to have good sufficient knowledge about the fraud risk, but we are not supposed to be an expert of investigation. What does it mean? Because it means that there are people who are very hardcore experts in forensics, because of their experience, because of their trainings. So they, and because of the technicalities involved in fraud. Sometimes the fraud happen does not only happen in terms of financials, it happens in the operations of the company. There could be certain other kind of a fraud. So we might not have the competence. If an auditor have, then they can, but if they don't, they shouldn't. Fraud risk assessment, we are responsible. We have to carry out a fraud risk assessment, evaluate controls and design, and apply an audit procedure to ensure that there is no exposure to the fraud risk. But in certain kind of fraud in investigation, high profile or some technical, that needs to be carried out by technical people, unless until we have the competence. Fraud indicators, yes, we need to be aware of all the red flags and the indicators which we have discussed in the previous slides. That's one of our role. Recommendation, auditors can recommend for in fraud investigation based on the indicators. If they feel there is enough of evidence and a ground for an investigation, they can highlight that risk to the audit committee or to the board or to the management that this area needs to be further dig down in order to identify that if there is any fraud happening or not. So now we are entering the second section of the unit 7. The first one was about the fraud risk and types of fraud, and the second is about fraud controls, and the third will be about fraud investigation. So here we talk about the fraud programs. So fraud programs are um, a, a mechanism that is being devised within the company by which we try to give an awareness to the people that what is fraud, what are the indicators, to look around, to be vigilant, and to oppose them of even having that illicit thought about having committing a fraud. So awareness is important. Prevention is important when you put proper controls in place within the company. There is less likelihood that the people might incur or the occurrence of the fraud reduce. Proper reviews, proper approvals, safeguarding of assets, checking, inspection, audits. So these all leads to a company policy and culture and environment, zero tolerance for fraud. This all leads to an effective internal control in terms of managing the fraud risk. Detection program is also important. Sometimes you put everything to the best of your ability, but still something goes wrong. So then you have to carry out an investigation, and post investigation you need to fix those problems if there was any. So these are the three components in the awareness, prevention, and detection in a fraud program. Fraud related controls, some of the controls are being specified in the ethics policy. So basically we want employees to be of high morale, and they should not be doing anything wrong and for that we give them the awareness, and we state what constitute fraud and what are the consequences and what it happened, how we will be investigating. So this all being defined and put it forward in the ethics policy. So that is one of the controls that we place in order to ensure that people do not commit fraud. Fraud awareness trainings are being held within the companies. Fraud risk assessment is being carried out by the risk management team, by the internal auditors, by the fraud control or anti-fraud department if a company have, to ensure that the whenever they carry out a risk assessment, they also look things from the perspective of fraud, that if things go wrong in that way, are there any controls that are being deployed to manage that risk. Ongoing reviews and approvals, this is an effective mechanism by which you segregate the duties and responsibility among people, and that help to reduce fraud. Prevention and detection, prevention is again the controls, and detection is when someone committed fraud, then we look and identify, not only to see that who is responsible, but also to look for the loophole and try to fix it. Investigation, so whenever we have to have an unfortunate incident, then we have to investigate, and while investigation has a certain protocols, who will be carrying out the fraud, who will be giving the approval to carry out the fraud, how it will be done, will that person whoever is being put it as a perpetrator of fraud should be allowed to work during that time, or should not be, or should be suspended for the time of investigation, how the documentary evidence will be gathered, who will have the custody of the information, who will decide on the final outcome, how the legal suit will take place, so how the damages will be recovered, or what will be the remedy. So this all is being taken into account in terms of investigation protocols. Here we are entering in the third section of our unit 7, which is fraud investigation. In the previous two sections which we covered was about types of fraud, fraud risk and controls. So this is the section where we will be discussing exclusively about investigation, who is responsible, what are the ways of doing it, in the coming few slides. The management, the first point, the management is responsible to develop policies and procedures in regards to the fraud, They have to ensure that all the evidences are being preserved properly during any investigation. Respond to the results. For example, if someone made liable, then how you respond, that needs to be taken like fairly. um, and the action of the management should be fair and transparent. The fourth thing is reporting, that you should fairly report whatever happened and the entire details about the fraudulent incident. And the last thing is communication, that to whom it has to be reported, internally, externally, to regulators. So that all depends, and there should be a proper mechanism and protocol that needs to be followed. And this is all the responsibility related to the management. um, Sorry. There are certain skills that are important for investigating a fraud incident, because these these incidents go for legal proceedings, legal suits, civil, all criminal uh, suits. So that's why we need to have someone who is very expert in it and know how to challenge the allegation or to prove that allegation against someone in the court. So that's why it's not something which can be taken lightly. Therefore, we do not mandate the investigation part by the auditor, but the auditor can do. So if we feel that the auditor doesn't have the competence, then we have to find a person who is competent enough, a professional, maybe forensic investigator or something, who can come and carry out that engagement. Um, the skills, accounting and auditing skills obviously helps in the investigation part, but there are other behavioral skills or legal understanding of the nature of the law. So that's also important. um, Auditor, lawyers and other specialists could act as an investigator. If an auditor are responsible to carry out a fraud investigation within the company, that needs to be defined in the charter, and it has to be part of the fraud policy. Um, to be efficient fraud investigation team, you need to have sufficient knowledge about fraud schemes. There are different types of schemes, which we have discussed earlier also, like asset misappropriation, corruption, bribe, skimming. These are the schemes. So you need to be aware of those schemes. Investigation method, there could be tens of ways how you investigate the matter. And third is applicable laws, because generally these fraudulent cases end up in the court. Lead investigator is the one who is the responsible and who decide whether he has in-house competence to investigate or he needs to outsource. uh, One of the things that we need to be mindful in fraud investigations, generally the conflict of interest is one of the element that lead to a fraudulent activity, which means that someone is giving himself or herself more priority over the company. So that one thing which you need to be mindful about. All the evidences needs to be chronologically be put it in place. For example, we have to put it dates and times of the incident that happened. From, let's say, an incident happened last month, so we say that the evidence of that person entering on the 1st of March in the premises, then he takes certain things at 5 p.m. the same day, then he did not appear into the office the next 2 days, then he applied for a leave on that day. So chronologically all the evidences should be made for having a trail and understanding of how the scheme was being perpetuated and how things being committed. So this is one of the protocols that we have to follow. Investigation should be coordinated. Obviously, any investigation when happens, so we have to coordinate with our legal counsel, maybe the auditors of the company, the management of the company, some other departments. So that's coordination needs to be taken into place. The evidence needs to be secured and the chain of the custody shall be followed. So the chain of custody and the evidence preservation is so much important, because you can make someone liable only if you have the evidences, right? So the preservation of evidences, the chain of evidences in the custody, and who's responsible to safeguard that evidence is very much important. One thing we have to be mindful about fraud cases, that the interrogation which take place in the fraud is very much different from the normal general interviews which we carry out, even basic understanding during our audit execution or during our audit procedures. um, in the normal course of a business, we go from general to specific, so we understand the business, understand the process, then we ask some specific question. However, it happened absolutely opposite of that. You are very specific about the questions which you want to put it forward in front of the person while doing an interrogation. Even the techniques differ. You have to observe his physical attributes in terms of is he stressed out, is he sweating, does he maintain an eye contact. You reveal certain facts to see how he react. Does he confess his fraud or not? I did CFE, so Certified Fraud Examination certification. In that, we were being taught that how to have an investigation. There was a full course on investigation in that course. So there they were very specific about how you carry out an investigation, interrogation. In investigation, and whenever the investigation is happening, we have to suspend that employee for time being. So there is no a possibility that the person destroy the evidences or manipulate the information. So just this is one of the key initiatives we take whenever we are investigating any fraud cases. In related to fraud reporting, the obviously the internal auditor are responsible to inform about if there is a fraud happening, and the report about the fraud. They might not be the investigator, but they have to inform to the audit committee that there is an investigation going on and this was the final report and all. Any draft report of the forensic audit or fraud investigation needs to be discussed and reviewed by the general counsel of the company or legal counsel of the company. Because these are sensitive matters, you might end up in the court, so you don't want to messed up with from the legal perspective. So you have to be very vigilant, and if the auditor is investigator, then they have to go. But anyways, you have to go to the legal counsel before issuing the final report. Any significant fraud shall be timely reported. This is very much important, because the timing is so vital, because it can differentiate between a smaller damage to the company to the very massive bigger damage to the company. So that timing is important, so you have to timely inform to take, and so that the management or the board can take a timely course of action to manage that risk. Um, so let's say that the forward engagement has been concluded, the report has been issued. So now how we can go about in terms of resolution of the fraud incident? There are certain things that we needs to take into account. For example, resolving. So the management and the board is responsible primarily for resolving that fraud incident. In a sense, whoever is being put or allocated for a fraud uh, commit whether they have committed a fraud or not, but they were found innocent. So we have to reinstate in terms of their responsibility, and we have to respect them, and we should be very much clear about that these people were being interrogated during the investigation phase, but they are clean. So that needs the closure to a person. uh, innocence that needs to be done. Discipline, these if a person has committed a minor fraud, maybe out of negligence, maybe out of intention, whatever, um, we have to discipline by giving warnings or setting an example for others to follow. Financial restitution is when we ask for the damages to be paid by the employee, so or whoever is a party. Contract termination, if we feel that our vendor or our supplier, they have they are in breach of certain terms and conditions, or they have committed a fraud, then we terminate the contract. So that's termination is important. Now, law enforcement, where we feel that the legal institution needs to be onboarded, so we have to report on in that aspect as well. Civil suits, if there's a need for, so we file civil or criminal suit. Insurance, we have to file an insurance for the damages if we are insured, and recommendation that how we can fix that problem so it doesn't happen in the future. So these are some of the key attributes that needs to be taken into account while resolving a fraud incident. So now, after resolving the fraud incident, the next step is communication. So to whom we have to communicate about the results, about the entire thing which happened. So the management and the board is primarily responsible to decide on, because sometimes we have to keep things internally within the company. Sometimes we have to inform to the regulatory people, law enforcement agencies, so that communication is the responsibility of the board and the management to decide to whom that information about that incident needs to be disclosed. Opinion of the fraud related controls, the board might ask the internal auditor to give their opinion in regards to their controls which has been employed for managing the fraud risk by the management. So we as an auditor can play a role where we provide an assurance on whether the controls are effective or not, because anyways this is part of our responsibility to have a fraud risk assessment and to see whether there are proper controls functioning or not. So this is the role of the internal auditor, and this is the last point in the entire section. So by this, we have just concluded our fraud risk related unit of the claim. There are certain additional topics or areas that I would like to cover, which I believe I have not covered in the earlier sections. In today's time, since we are very much exposed to the to online activity, so the fraud landscape has been changed. Now it's more digital, and we will discuss those digital kind of threats that we may expose to in our day-to-day life. Furthermore, there are certain additional red flags added to the fraud indicators that we also have to discuss. The first thing is the new threats. Phishing and spear phishing. The difference between is phishing is when you receive an email, uh, which is, for example, from your bank, and they ask you to enter the password or to click a link to access your bank account or something. So that is phishing, the one which is fake. However, spear phishing is a very targeted approach where you receive an email from your boss asking you to transfer certain funds or do a banking activity. um, as I have earlier said, this has happened in one of the company I was working. So basically, the fraudsters, they were very much patient, and they were monitoring the emails of the company. They could find a way out by which they were able to read the emails, and after a couple of months, when they understand all the hierarchy, the nature of the payments, the pattern of the payments, then on one day, they requested the financial controller or CFO in another region to pass on certain payments to one of the family member, and they have requested that to that he that that one of the owner of the company change his bank account, so please transfer to another bank account. And surprisingly, and he gave the context in which they were having a discussions. So he gave a proper context, like for this kind of activity we needed this payment which we are following up, so it's an urgent and I'm traveling. So they give a proper context to it, so the finance people, they literally felt legitimate, and they have already sent the payment. It happened to be that the finance guy called the person, the owner of the company, one of the owner of the company, and he just said that I release the payment which you have requested, and it was not for this purpose, for some other purpose, the call. When he came to know about certain kind of payment, he said, which payment you are referring to? He said, you requested me a couple of million for this new bank account, so I just made a payment. He said, I haven't told you. So then he said, we need to reach out to the bank to stop the payment. And eventually what happened that luckily we were because it was a weekend, so the bank has not released the payment, so we were able to cancel the transaction. But then we made certain controls procedures. For example, after a certain threshold, we need to check. The bank has to call for the authenticity of the payment, and then the finance people has to call the person as well. And such red flags, for example, changing the bank account needs to be reconfirmed uh, with the process owner before releasing any payments, and certain action needs to be taken. So this actually happened in real life. Spoofing is another one where they fake the emails by having a proper like company domain. So it might apparently look like the same company domain that the email has received, but actually there might be one word missing, a dot is being added. So spoofing is that kind of a thing. Wishing is when a fraudster call you that you win a lottery and they have to process your prize money, and they need some management fee. So that is called wishing. Smishing is when you receive an SMS that your delivery is in the process, or you need to click on certain link to make the payment for your online delivery. So that could be the thing. Squishing is a QR code. For example, they might pretend that it's a web. For example, you went to a restaurant and you want to order something, and they stick a sticker on the table menu, and that take you to make a payment, but it doesn't go to the restaurant, it goes to someone else. So that is called squishing. So these are some of the digital fraud these days is happening. We all receive these kind of emails, and some people get prey and some people are being exposed to such if they have limited knowledge, or sometimes they are in a rush, so they get exposed to such kind of threat. Cyber risk, on the other hand, there are certain other cyber risks that happen in our today's digital landscape. The first one could be stealing online money or data. It could be through cracking a password of a digital wallet and taking your cryptos, or those kind of thing can happen in today's time. Weak patching is another risk. It could be that the version of the software which you are using is not up to date, and there are certain loopholes which the hacker use it to get the data, or um, yeah, install some malware by which they can you know control your devices and steal information. Another one is unsecure devices where you do not have very protected passwords. USB is not disabled, so in that way is another way of cyber risk. System overrides also happens. Hackers sometimes bypass the system rules by gaining an admin access and then changing the passwords. This can also happen in our today's time. Other than these two topics, the new threats and the cyber risk, there are certain extended red flags in fraud investigation that we has to have to be mindful as an auditor, which contributes to fraudulent activity or which might lead to or give a environment where this risk get a bit more um, um, can happen quite often. First of all, if the organization structure is unstable. Secondly, if you see that at the executive level or in the finance department, a lot of turnover happens, unusual end of the period entries. This also give an impression that the controls are very weak, and this entity or this department is susceptible to different kind of fraudulent activities. Excessive sole source purchasing, it also, and when we do not do competitive bidding for purchases, it might be that the employees themselves are selling things to the company without disclosing their conflict of interest, or buying things by taking a bribe or commission at an excessive price. So this can also happen. Negative publicity or stock declines, sometimes these are also an indicator that there is something wrong, or the control environment within the companies are weak. So you, as an auditor, we have to be mindful when we select our samples or we carry out our audit activities. If those red flags are there, we have to be more careful when picking up our population and samples. In terms of fraud related uh, responsibility of the internal audit, there are certain professional behavior that we have to ascertain or carry with ourselves, which also help us in performing our duties to the utmost professionalism with due care. These are independence and appearance in mind, that the internal auditor should not be independent theoretically, but also in appearance. Means, for example, you have a very close friend in a department, try to avoid auditing that, or maybe let the other auditors do the audit of that department. That is an appearance and in mind, that do not let the pressure of the top management change your opinion or audit finding rating, or you drop on some audit findings. Professional behavior, we have to be competent, we have to be professional with all our honesty and integrity. We perform our duties. Responsibility, we take responsibility for our actions. We perform our duties, especially the audit engagements and other investigations. If we are supposed to reviews engagements with the proper methodology, with proper resources, and take responsibility for our opinions. Skepticism, that we just do not take management responses as accurate, but we question, we challenge them, we look for evidences, we look for supporting documents. So this skeptical mind of an auditor is supposed to be there. And lastly, the judgment, we have to have a proper professional judgment, and judgment mainly come from experience. And when you have done a variety of audits in different setups, and especially if you have numbers of years of experience, you get much more maturity. So if you're a junior, reach out to your seniors, discuss with them. If you're doubtful about something, sometime it's better to trust your instinct. And if you are a senior, utilize your previous experience, and try to be as impartial and professional in your judgment as you can. Other than that, there are certain detection tools that we, as an investigator, can utilize to identify frauds or to investigate the frauds. These are, the first one is data analytics or computer assisted audit techniques, data mining to identify anomalies. I'll give you one example that one of our auditor was reviewing the procurement function, and they have identified payments and change of bank accounts. So eventually, when we dig down deeper into it, we came to know that certain payments were unauthorizedly done to non-relevant parties, and it was a fraudulent activity that has been happening for quite some time because the management does not have very proper controls, and certain system controls were overridden. So the person who changed the bank account details does not inform anyone, and the system doesn't stop him for review and approval process. So that can happen. So data analytics tools that allow us duplication of payments, sometime comparing the address of our vendor with the employees, change of bank account details. So there are a lot of kind of controls testing that we can perform through in a deeper level and on the full population, and identify the exceptions, and then we investigate. So it can be a great tool if we allow data mining or analytical tools in our investigations. Bradford law is basically a theory. This is certain kind of digits, certain numbers starting with certain kind of digit could be a made up numbers for unusual, that we can use our found exceptions and see whether those numbers are correct. For example, if a number or if a payment is starting with nine something, so and there are too much frequency or there are too ad hoc nines, so this could be a red flag. So this is a theory. You can google it, you can find it. There are certain numbers, usual patterns that we can develop, and this is just to reflect that there is high probability with such odd numbers of transactions, or value of those transactions could be made up numbers. So this is a Benford law theory. Discovery sample is when we take a sample from a population and we keep on reviewing until we find some exceptions or some ad hoc um, or weird numbers, especially if it doesn't comply with the pattern. Though there is limits, but generally, when we have a very good indication that in certain activity there is a high probability of a fraud, then we carry on such kind of technique to review. Not we do not take some random samples, or we do not take a limited sample, but however we take an extensive sample to try to find an anomaly in the sample, and we only stops until we find it. If we don't find it, obviously at after a certain numbers we need to stop, but generally this is the idea. Another technique or which we can use is stress testing. And stress testing is that we can push the control to the limits by multiple transaction and see whether the control allow for certain kind of transaction to be approved or certain transaction could be stopped. For example, if you given let's say credit sales at a certain level, 100,000 plus cannot be given a credit sale, for instance. So we push a lot of month end in a dummy test environment, a lot of transactions, and see if that can be done or not. So it is basically you put pressure, or you just see another control, um, whether in a extreme environment does it allow or it breaks or not. For example, hacking activity could be um, pressure testing on a website to see whether it can we break into a website or not, or a company system or not. So this is called pressure testing. Inference testing is another technique where we try to use statistical method to find abnormal trends. I'll give you an example. For example, one of my colleagues, he told me like he was working for an oil and gas company, and a lot of engineers, they work on the side and in a very remote areas on different rigs. For example, there was one project where it was required to to do some construction or something in the desert, in the middle of the desert. And he found like, and the company has a certain level of a policy that you have to employ a certain number of women's in the company, not at a field, but as a whole. So in order to comply with the regulation, they have just made it up that certain employees were females. So when he went and tried, because it doesn't make sense in such a remote area and in extreme weather, there is a probability, but it doesn't make sense to him at the time. Like, just I have to validate whether the women were there because they have to comply with certain regulations, and they were short with the number of women employed with the company, so they just made it up. So when they check and they try to investigate, they just found like those projects which has been completed, they have faked the employee gender. So this kind of example could be inference testing, where you try to identify statistically any abnormal um, behavior or trend and then try to investigate. Ground truth testing is very simple. That when you test the policy implementation, whether exactly the policies are implemented or not. For example, one time I was doing a bank audit, and the physical security I was reviewing. So the vault of the bank needs to be opened through two different keys, and they're supposed to be two different individuals because one person should not have the access to both keys. So I asked them, "Can you please open the vault for me to test the physical control?" And I see that there were actually two people. One put the key, the other put the combination, and this is how they open the vault. And these are not small vaults; these are big room size vaults, and there are additional controls as well. So this is, or if you see implementation of any policy, for example, three-way matching is not happening or competitive bidding is not happening, so it's in the policy. So this is called ground truth testing. The last one is financial statement analysis using ratios, trends, and peer comparison. So basically, you look for certain kind of expenses and see whether it is as per the market trend or as per the sales. And if it doesn't make sense, then you look for those anomalies to see whether the sales are being inflated or not, or what is the reason that if it doesn't comply with the market trend. So this could be another way of identifying or performing techniques of investigation, and these could be applied in internal audit or in fraud investigation. So it doesn't restrict us to only use these kind of techniques in investigation only. However, uh, this is the end of the entire CIA part one, and this was the last topic. These were a few things which I realized that I haven't covered in the previous slides, so I just bring it up in the end. And I hope that the whole explanation makes some sense to you. Try to understand and find more examples for each type of detection tools or other pointers, because they are very similar in nature, so you might confuse what is. For example, in the previous slide we talk about spoofing, and then we talk about there was what it was, let me rethink. I forgot it. There was one spoofing and there was another one. I forgot it. I literally forgot it. Yeah. Anyways, so these kind of things you should not mix with different concepts, because there could be an MCQ where they are telling you that this is the scenario, and in this scenario which fraud techniques is being used, or what are the fraud key risks, so you do not confuse, because most of them look similar but they are slightly different to each other. Just try to build a comprehensive knowledge on each point. Thank you for watching all these videos of CIA Part 1, and I wish you good luck with the end of Unit 10. We have completed, Alhamdulillah, all the key topics and all the key units, and I try to cover at least 80% of the content, 80 to 90% of the content in my videos. So it is very comprehensive, and along with that, in each video description, there is a link to download the notes. Um, so anything that is you see in the slide, that you can download through the notes. It's a very summary notes, it's a very brief notes, summary notes, which generally comprise of 2 to 3 pages per unit. Whereas if you look into the book, each unit might comprise 20, 30 pages. So it's very comprehensive. The technique which I would recommend you, if it works for you, if it doesn't customize to your approach, that initially listen first to the video, then go through the notes so you can recall the concept that you have already discussed in the video, for retention purpose. And then if you have time, go to read the entire unit, or try some MCQs and see that how you can apply those concepts in the most critical way, and treat the first time practice of MCQs as a learning activity. It's not an assessment, because I know in Gleim the study text looks very simple, the concept looks simple, but it is not. When it comes to MCQs, the MCQs are really confusing. Sometimes the language is very confusing. Sometimes the similarity between two options is very difficult to eliminate the right one, or to the wrong one, to eliminate the wrong one and to choose the right one. So my humble opinion is that you can watch the video first, and when watching the video, if you are used to watch at a higher speed, because I speak very slow, um, so you can increase the speed to 1.5 or 2x, but that depends on how much concentration you want to give. If you are driving, then better to have it in a slow speed. If you are really sitting in front of the laptop and watching the video, then you can increase, because your concentration would be more. You can increase the speed. If you increase the speed, and generally my video should not last more than 30 to 40 minutes per unit, and if you skip the intro and the last slide, it literally should not take more than 20-25 minutes. So in 20-25 minutes, if you cover one unit, then you go through the keynotes which are in the description column of each video. Then you try to practice certain MCQs, at least 30, 10-15 MCQs. If you found it like you still need some more comprehensive review, you can quickly go through the study text, or you can go through the study text before, then try to practice MCQs, and take the first set of practice MCQs as a learning approach, and then move to unit 2. So my own perception is that you should appear in at least 30-35 MCQs per unit, and then move to the unit 2, even though if you have not very well mastered the unit 1, but just try to have the first review completed. Because once you complete the first review, you will notice that there are certain MCQs in unit 1 they were asking for, and where you build the concept in unit 4, because there is no clear segregation of certain MCQs, or the information that you have learned in unit 4 or unit 8 or unit 9 complement you to have to better choose the right answer that you have attempted in unit 1. So they are all interlinked. Therefore, it's better to have the coverage first and then practice more and more, rather than trying to master the unit 1 and then go to the unit 2, because it will waste a lot. You will waste a lot of time. Your progress will be slowed down, and the linkage between different units and the knowledge which overall strengthen your review, would not be possible to happen. So it's better this approach. If it works for you, good for you. If it doesn't, please share your experiences in the comments if you passed the exam, and so other people can also benefit from it. And with this video, I would just request you to please remember me in your prayers, my family, and I wish you good luck. And pray for me that I complete the remaining two parts as well. It's a big task and challenge with a full-time job, but I'm trying my level best to complete the entire series. So that's all. Take care. Till next time. Bye bye.